Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode, Frozen Wallets, the silent killer of real estate investing deals.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam. Today's episode, Frozen Wallets, the silent killer of real estate investing deals. Today, I want to talk about something that quietly destroys more real estate deals than anything else. Real estate deals generally don't blow up simply because the one party or the other party has decided they don't like the deal. I mean, that'll happen, but it's rare where you get a seller who's decided they don't want to sell or a buyer who can't perform and buy. It generally doesn't happen because the offer was made in the wrong neighborhood or that some of the numbers have changed a little bit. Those generally don't blow up real estate deals. What typically blows up a real estate deal is a person's thought process. It's a frozen idea. It's a frozen ability to pull the trigger. People that are frozen because a lot of times of fear. Fear of what? Fear of the unknown, fear of the possibility of the downside, fear that this may not be the best opportunity out there. It freezes wallets. And so what happens is people get into fear, they freeze. They freeze their money, they freeze it. And this is in every area of life. This isn't just in real estate investing, but we're talking about real estate investing. But this can happen to anything where unknown to you, because of the way you think, something may transpire and it may cause you to pause, to get into this place of fear of what tragedy may befall. Now, we've talked about it before in some of our podcasts when we've done our mindset podcasts and talked about the importance of looking beyond the unknown to us. But think about this. When you make an offer, you're going in with total hope and optimism, right? Hey, I'm making an offer. I get this great opportunity to do this deal. Now, before the offer is ever made, you should do what? You should know your numbers. What causes fear after an offer is made is people really didn't know their numbers. And then it freezes them. It freezes their wallet. There's a lot of investors out there that aren't making offers. They're evaluating everything. They look at the numbers. They look good. They think this is a great deal, but the fear of where the economy is has frozen their wallet. And it's a silent killer of real estate deals because it's not that the deal is bad. It's not that the numbers don't work. It's that they've allowed fear to hold them back from moving forward. Now, not every deal that we do is what I would call a home run. I mean, who wouldn't like to make six figures on every deal you do? I mean, I would. I mean, this would be a super simple business if everything we did was making that kind of money on every deal. And I know, I watch the YouTube videos, I see the Facebook videos, I see all these things out there these guys are putting out about how they've got a system where you just do this, and man, you make, 100,000, you make 200,000. It's easy way to make, $1 million a year. But the reality is that things don't always work that way in life. Why? Because again, fear gets in the way. The hope and optimism is there, right? So people shell out $10,000, $20,000, $30,000 for these programs. They get all the information, they read the information, and then they evaluate the deals, they find the deals, but they have a frozen wallet. When the numbers look good, they just never look good enough. They take so long to get over that hump and get over the fear that when they're ready to move, the deals are gone. So see, a frozen wallet really is a killer of real estate investing deals. You have to know that when a deal is right, that you're going to jump on it. I have had deals that I haven't even evaluated, right? Somebody else evaluated, they called me and said, hey, this is a great deal. It's just not in an area where we're doing it. We need an answer like right away or the deal's going to be gone. If it's somebody that I've worked with before and I know that their process, I know how they evaluate things, we've partnered together in joint venture deals before, there's times where I'll pull the trigger on it. And we'll just go into it. And then we run our own numbers and just validate everything. But we're moving forward. We're running the race and keeping our momentum going forward. Because as soon as we stop that momentum, as soon as we go, well, interest rates are now at 10%, they're at 12%, hard money's at 18 and 20%. As soon as we start looking at the problems, we miss the opportunities. Our wallet freezes, right? We freeze at every turn. There's sometimes, I've had people lose perfectly good deals because, again, their wallet was frozen. So they got under contract, they inspected the property, they found some problems they didn't think it existed, and the action they took was, I'm getting out of this thing. Well, what would keep you from going back and renegotiating the deal? We make generally a commitment. When I go and we make an offer on a house, I'll sit with it and I'll say, Mr. Home Seller, I really want to buy your house, and this is the amount of money that I'll give you for your house. And I've looked at your house. I know the basics of the house, and assuming that the air conditioning and the foundation are all in good shape, we won't renegotiate this agreement. And then we get under contract. We go in and we do a more thorough inspection. We find that there's an area where the foundation may have shifted, 3/4 of an inch, and then we can find some shift in the footer, or we see that the air conditioner they told us was 5 years old is really 25 years old, right? Well, we could cancel and get out of that deal. But what if we went back to them and said, well, Mr. Seller, look, we asked you about the condition of this house. We took your word on the condition of this house. So we pre-plan some of this. And then we say, but in this case, your air conditioner is not 5 years old, it's 25 years old. The foundation, you knew about this, the foundation's going, and then we renegotiate the deal. Now, sometimes the houses are just, hey, let's walk away, this isn't worth it. But generally, we can go back and we are reasonable. We do not play games with sellers where we tell them, hey, we're buying the house, we get it, wait till the last day of the inspection period, wait till they're boxed up, wait till maybe they're moved out, and go back to them and try to renegotiate the contract to try to take advantage of somebody. We don't do that. But if we find something that would freeze most people's wallets because of fear and kill the deal, we try to find solutions that'll work for a seller, because let's face it, they're going to have the same problem with the next investor that comes along. And the next investor may not operate like we do, where we try to operate out of integrity, find solutions, make each deal a win-win. But we look for solutions that keep our wallets unfrozen. We look at the opportunities. We look at how can we make this deal work? Because as soon as you get in that place where every time there's a bump in the road, every time that the deal changes, every time that there's a title problem, we've had deals that have taken over a couple of years to get closed. Would have been easy to walk away. In fact, as I remember on one deal, I was actually the real estate agent. I was hired as a real estate agent through a law firm to represent a client on a property. And we put the property up for sale at the price that the seller wanted, and we couldn't get any bites on it. We had given them, what we thought the cash value was and all those things. Well, eventually they got the price of the house down to where investors were interested on it. And this had to be an investor sale. It couldn't qualify for any financing, needed to be cash. And every time an investor would get in it, then they'd come look at the property and they'd bail. This happened over and over and over again. There were a lot of problems with this property, but it was a perfect property opportunity for our company, Cash Offer AZ, to buy. And so what we did is early on in the process, we said, hey, look, we're not interested in buying the house because of our fiduciary duty to sell it. But if for some reason you come to the place where you can't get any offer or sell it, here's what we'll give you for the house. So we had an offer on this house like 2 years prior to the end of where they finally came to a place where the actual primary seller of the property went in the hospital, pneumonia, ended up passing away. The estate took over. The estate was tired of all the bumps. We had to disclose because of our fiduciary duties, and then they accepted our offer and did all the title search. Well, in the midst of that, now we've got a probate issue. We've got liens that are 30 years old for private lenders that we've got to get deed releases from. We got a lawsuit attached to the property. I mean, it was problem after problem after problem, which would have frozen most wallets right there. I mean, that's the reason why the other investors, they didn't see the opportunity. But we looked through it and got the deal done, persevered, and kept the numbers working for us so that we can move the deal forward. Again, when you're an investor, it's easy to find problems in things. When you're an investor, you've got to look for the opportunity in things. I don't want to overlook a problem. So for instance, if there is a problem in a transaction, say a property is worth, $500,000 when it's done, and we can buy the property for $300,000 and it needs $50,000 to $75,000 of the work. So there's some margin in this property. Closing costs and stuff, it's going to be a decent property to do. And we get into the deal and we find some problem, significant problem. We try to find solutions that can work out that problem to keep the deal moving forward. I have had students, I have had investor friends that have just walked away from those deals. If you're going to be a successful investor, if you're going to be an investor who can work in any economy, you have to be an investor who can find solutions to problems. That's what we get paid for. That's why on some of these deals we make really good money, is because we're coming up with solutions to problems. The bigger the problems we solve, the more money we make. So sometimes problems get so significant that the seller is going to receive less money in the transaction. I'm not going to bear the burden of the problem. And so, but we don't let it freeze our wallet, because that is the silent killer of real estate investing deals. So we need to be proactive. We need to keep looking at our real estate investing transactions from a different perspective than what most people do, because we want to be successful. We want our clients to be successful, but we also want our company to be successful. I want everybody on my team to be successful. If I can find win-win solutions that make it profitable to continue to invest, that's the business that I want to be in. Well, I hope you enjoyed this episode of the Whitwam Wealth Real Estate Podcast. Be sure to join us on our next episode of the Whitwam Wealth Real Estate Podcast, and invite any of your friends to come and join the podcast or find some of our previous episodes that are out there. We are doing this because we really want to help people. You can find us on iHeart Podcast, on Apple, Spotify, YouTube, or wherever you enjoy listening to your podcast. This is Scott Whitwam. I want to invite you to join me again on another Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.